All right, let's talk about the ominous Fed rate hike. I'm sure by now you've heard that the Federal Reserve is planning to hike rates. So I wanted to explain exactly what that means and the impact it will have on mortgage rates, or likely have on mortgage rates. So first off, the Fed controls the overnight rate, not long-term rates like mortgages. They have kept this rate very low for the last 10 years, but they will need to do some aggressive rate hikes to curb inflation. Typically, the Fed would raise that rate by 25 basis points, but 50 basis points are what is expected in May and the following months, because unfortunately, they did not quell inflation in its early stages. The Fed fund rate, or the overnight rate, directly impacts the interest on things like home equity lines of credit, credit cards, and car loans, amongst other things. So many people confuse the rate hike for mortgage rates, and typically the media is also confused on this as well. Now, this rate hike will have an indirect impact on mortgage rates, but it's important to know that even though the overnight rate, when it goes up, it does not necessarily mean mortgage rates will also go up. In fact, it's expected that this rate hike will likely help pricing on mortgage-backed securities because it will lower inflation, thus it will lower interest rates. Inflation is pretty much the number one killer for mortgage rates, and it is why we're seeing them shoot up to crazy levels so quickly. So hopefully this rate hike in May and ones coming up will continue to help the inflation go down, and we could see rates really improving in the latter months of the year, and pretty much expected that a recession is on its way. And this will certainly also help inflation, and it will also help mortgage rates go down. So call us anytime if you want to discuss where rates are at that day, and discuss where they're likely headed in the near-term future, and get an idea what you should do best for your situation. Just call us at the number below. Can't wait to talk to you guys. Thanks.